guys, and welcome to another edition of Market Marauders, beating the market one trade at a time. If you guys are new to the channel, Market Marauders is an investment channel basically geared around investing and trying to find better plays in the market so everybody can make money. Um, it's just basically from a perspective, just my perspective, of your average everyday investor. Um, I don't have any degrees in finance, but just showing the average person that you can start investing with what you have, and there are good plays out there in the market. So, secondly, uh, I think reading is very fundamental. So, in the description down below, there are a couple of book suggestions for people to read that got me started in investing. And, reading is always fundamental and it helps you gain knowledge for investing in the future. So, if that's something that you all want to be a part of, make sure you hit that subscribe button down below. Like, comment, and share. Then we're going to dive into it. Today is a very special episode. Basically, going to say how you can make millions in the stock market during the 2020 recession. So, yes, it is possible. I'm going to go over basically my philosophy around that and explain to you all what industries I think are going to take off. So, let's first start. There are three industries that I think are going to do the best during this 2020, and the first one is health. So, the health industry I think is very important. Um, with everything that's going on, and the first stock that I'm going to say is going to be INO ticker sign. That is for Inovio Pharmaceuticals. Now, they've had a really good run in the past week. I think they're going to continue to have a really good run in the following weeks. Um, I'm currently invested in this one, so I may have a little biased opinion on them, but just based on what I've read about them, I think they're a pretty good company. I think they're going to continue to grow. They actually went to the White House, and the CEO went and talked to Donald Trump. So that was pretty interesting. And their roundtable discussions, if you guys follow politics or follow the news, they basically had a roundtable discussion with a couple of companies. The first one was with a bunch of airline companies, and the second one was with pharmaceutical companies. And INO is one of the companies that said, they're going to start human testing in April. So pretty excited about that. And looking forward to what they're going to be doing in the future. So their moving average 50 is $4.19. Moving average 200 is $2.94, and they ended on Friday at $14.09. So pretty high, pretty significant jump in price. Also on this channel, I like to give a little background information on the company, so it's not just random picks. So we're going to jump into one of their press releases, so we can see, what gave that spike for the company. So, if we could read this article, basically showing what gave them their spike. It says, today announced the accelerated timeline for the DNA vaccine, the respiratory infection. The World Health Organization has designated a public emergency of the international concern at the highest level. So basically, they're trying to develop a vaccine. It's kind of like a buzzword in this current economy. So, that's why I chose them as one of the one of the health companies. That I think health is going to be a big factor when it comes to that. All right, now jumping into number two, jumping into my second one, and these are in no order, no specific order, by the way. So if you guys are looking at this and want to skip through there in no specific order, so just bear that in mind when you're watching the video. So going to the second one, we got ticker sign OPK. So OPK Health Incorporated, their moving average 50 is $1.56. Moving average 200 is $1.81. and they ended the week, which was last Friday, at $2.32. So bear in mind, whenever you watch this video, these prices are going to fluctuate. It's currently the weekend, so they're stagnant prices. But come Monday, tomorrow, the 9th of March, these prices are definitely going to change, whether they're going up or whether they're going to go down. This all depends on the market. So just bear that in mind when you're looking at them, that these prices are reflected on a different date. So going to ticker sign OPK, jumping into their press release, we can see that this company as well is trying to develop test for the epidemic that's going on. So any company that's involved in that sort of kind of niche market, especially when it comes to an issue of this magnitude, definitely is going to have growth. So that's ticker sign OPK. Going back for where they ended at $2.32, and I think they still have a lot of growth potential. So going to the third one in the health category, we're going to go to ticker sign HTBX. Now, you guys will be wondering, why do I have a chart that has their moving average 50, moving average 200? For me as an investor, the way I trade different stocks, I always like to see companies that are, their breakout above their moving average 50 and moving average 200. To me, that shows that they have a lot of growth and that there's a lot of momentum behind the company for them to continue to grow. Usually, a lot of companies that I see, just from personal experience, that don't go above their moving average 50 or moving average 200. They're kind of like in a lull, and they're kind of struggling, whether that's between management or revenue or something in the company, is not allowing them to push above that moving average 50 or moving average 200. So that's just the way I invest. There are a lot of different strategies out there, but that's just the one that I personally use. So that's why I have a chart for moving average 50 and moving average 200. So their moving average 50 is 38 cents, moving average 200 is 52 cents, and they ended the week at 82 cents. So jumping into one of their press releases, we can see that they are also working with the University of Miami to develop a vaccine. Now, all these articles that I'm pulling up, these are all public articles. Just go to the company's website or go into Google and type in like the company's ticker sign and just type in press releases, and it'll bring up all the press releases for the company. All these companies are publicly traded, so they release all this information for the public, and the articles are all public domain. So it's not like I have some special pass to get into these different articles. They're all just general public information. And that's one of the hard things when it comes to investing for a lot of new investors is, people always wonder, how do I find information about the company? I like the company. I see it going up. I want to get involved. I like what they're doing. I think they can grow, but I just want to know more information about the company. Well, every company that's publicly traded has information. Just type in the company's name and type in press release, and that'll usually point you in the right direction for articles on updates on what the companies are doing. So for my fourth and last one in the category of health, we have ticker sign IBIO. So that's for iBio Incorporated. Their moving average 50 is 52 cents. Their moving average 200 is 53 cents. And they ended the week on Friday at $2.05. Excuse me. So definitely have some momentum from this company. Given March is kind of when they started their momentum shift. They kind of had a breakout towards the end of February, the beginning of March, and they've been kind of up in the $2 between $1.50 and $2 range in that time period. So jumping into an article from them, we can see another vaccine development from this company. So all those companies are in vaccine development or vaccine testing. So I think if you get involved in any one of those, it's going to be a good pick in the long run because they're going to be profitable, and a lot of those are just like one press release or one article away from just blowing up. So you know breakouts, come and go with those companies. And I think if you get involved in any one of those in that sector, you could yield profitable in your portfolio. So going to the next sector, I'm going to say is medical. I think medical is a really big sector. Now, you may say, what's the difference between health and medical? In my opinion, medical is like vaccines, pharmaceuticals, pills, stuff like that. In terms of medical, I think of surgical devices, masks, suits, um, things like that are I consider medical. So that's the correlation between the two. Some people maybe look at this video and say health and medical is the exact same thing. No, it's not. um, so medical may have some health aspects, in my opinion, but I think medical, when you see the pics, you'll see my justification on that. So going to number one, I have ticker sign MCK for Meekson Corporation. We can see their moving average 50 is 151.03. Moving average 200 is 141.82, and they are at 141.49. Now you may be saying, "Hey, this is actually below their moving average 50 and moving average 200," and I thought that was your basis for picking. Well, this company has been around for quite a long time. They have a dividend, but for you new investors, a dividend is basically the company pays you a certain amount of money, um, that they determine every quarter, and a quarter is every 3 months. So every 3 months they pay you a certain amount of money just for owning the stock. So just for owning a share of Mixon, you'll get paid, and that money goes directly to your portfolio. So this company has been giving their dividends out for a super long time. So I think they're going to be continued profitable, but the products are one of the main things and one of the main reasons why I picked them, even though the stock, doesn't reflect what they currently sell. I think their products and their product lineup is something that's going to be very beneficial moving forward for the company and for consumers. So going to their products, they have clinical laboratory products, pharmaceuticals, respiratory, um, wound care, apparel, masks, orthopedics, flushing devices, gloves. They got gravity feed bags, a lot of medical supplies that you see in hospitals or you'll see in clinics, and a lot of this stuff is like really good grade and really good quality. And companies that sell stuff like this, especially with what's going on, I think their profits are going to rise because the demand has risen. And it's not that the demand has risen like in just one country. So it's not like all of China is going to be trying to get a hold of these products. It's a worldwide issue. So you know the demand is global. So I think companies that make products such as these are going to continue to grow, and I think especially with a company with a good track record like Meekson, uh, I think they're going to continue to raise their dividend as well as continue to distribute that dividend because they're not going to be affected as much by the 2020 recession as other companies would be. Now, going into our number two pick for the medical category, we're going to say is Lakeland Industries. So their ticker sign is LAKE, Lake basically. So their moving average 50 is $13.13. Moving average 200 is $11.57, and they currently ended the week on Friday at $16.46. Now, just like Meekson, Lake also is a company that makes a lot of medical supplies, things that I think will be used in the field a lot. So jumping into one of the articles from Lakeland, we can see on their chemical category, they have a lot of different suits. So these are like hazmat suits. And if you've watched the news, you've seen people wear things like this all the time. And I think, as time goes on, more suits like this are going to continue to be bought, and they're like one of the number one sellers for these hazmat type suits. So this is something it's kind of abstract that people really don't think about, or I haven't seen really anybody talk about. But the leader supply of hazmat suits. That's something that people buy or that companies buy. So it's not even like, people on the street are going to be wearing this. No, I don't think so. But, government organizations are going to be buying these in mass, and they have a lot more capital than, the average consumer. So they're going to be buying large quantities of this, which means that, I can see the stock price rising, which definitely was reflected by this huge spike. So I think as time goes on, they'll be a lot more profitable and revenue will increase, which I think will definitely correlate to their stock price increasing. So going to my number three pick for medical, I'm going to say is 3M. Now, 3M's been around forever. They've increased their dividend. They're what you consider a dividend aristocrat. So for you guys who are new to investing, a dividend aristocrat is a company that has increased its dividend for plus 25 years or more. So they've increased their dividend for 25 years or more. They're also a dividend company, just like Meekson. I think Meekson is also a dividend aristocrat as well. So they've increased their dividend. The company has a good business model. Their moving average 50 is $165.49. Moving average 200 is $164.22, and they ended the week at 153.65. Now you may be saying, okay, it goes against the moving average 50, moving average 200 thing that you justified, but if you go and look this company up in the news, they actually have more. They don't have enough supply to meet the demand that they're trying to reach. So I think that is why the company has gone down, because they're trying to meet this crazy demand for medical supplies. So, you know, they have the opposite of a problem, which will directly be reflected in their revenue when their next quarter comes out. So I think, people kind of lost faith in the company because they've never had something like this happen to where their demand has increased so much, especially since the company's been around for so long. I think they really didn't, you know the magnitude of what was going to go on, but they're trying to mitigate that problem, and trying to increase their supply to meet that demand. So I think I can see this company going up in the future, and continuing to increase their dividend as they have so far. So if you guys don't know, this is what they make. They make medical supplies. Like I said, there's a lot of medical devices on here. Wraps, bandages, band-aids, uh, you know, test tubes, a lot of different stuff, medical devices, stuff they use in hospitals and clinics, stuff that's going to be bought, you know, just not even just for like regular, cases, but I think hospitals and stuff are going to start beefing up their supplies, which means companies like 3M are going to have, a huge demand when it comes to buying a lot of medical devices. So going into my number four, which is my last one in the medical category, we're going to have ticker sign BAX for Baxter International. I think that's what it is. Baxter, yeah, International. So their moving average 50 is 88.63. Moving average 200 is 83.99, and they ended the week at 85.38. So they are, smack in the middle between their moving average 50 and moving average 200. And I think they have potential to grow. Um, a good solid company. I think they're kind of down now, but I think they're going to go back up. Probably be about this level, 92, in my opinion. So they make a lot of medical devices as well. We go and look on here. Got blood warmers, retinal replacement solution, dialysis solution, just a lot of stuff in general for medical supplies. And I think they'll be a good fit to any portfolio for growth. Now, you know, any one of those four, I think, is going to be a good entry. I wouldn't try to have all four, but you know, having at least one of those four, like either having a Meekson or a 3M or Lake, because I think a lot of people are overlooking the fact that a company like Lake exists, but even Lake having surgical, I mean having quarantine suits, I think is a good addition to anybody's portfolio, and any one of those four I think is going to be pretty good. Now, going to my last category for consumer goods is what the last category is going to be. So the first one was health with those four. The second one was medical with those four. Now I'm going to have four more for consumer medicals. Now, consumer medicals, what I consider consumer medicals are off the shelf things that are you know, accessible to most people. Now, most people are not going to be going and buying like this hazmat suit or these medical grade materials, but people will uh, probably be buying more of like, you know, household goods and disinfectants and things of that nature. So this is more of the consumer side. So the medical side was more the corporate side, and this is more of like the in-home consumer side. So starting off with the first one, we have ticker sign PG for Procter and Gamble. Been around forever. I think they're a dividend aristocrat as well. They pay a dividend, so that means during the recession, you'll be getting paid while owning shares of this stock, which is always a good thing. More money coming to you. Um, their moving average 50 is 123.75. Moving average 200 is 118.36. And they ended right in between the middle of both of those at 121.66. So, good long term hold company. You'll be getting paid while owning the company. So, the more shares you have, the more money you'll get, which you can buy more shares. So, it's a win win all the way around with P&G. These are some of the products that they make. This is just on their regular website. They have make Pampers, diapers. They got laundry detergents. Going here, toilet paper, paper towels, feminine products. Shaving products, soaps and shampoos, dish detergents, toothpaste. And the list goes on. And these are all things that people need. I know, like recently, in the state of Tennessee, they just had tornadoes that came and ripped through uh, the state. So people are going to be buying all these products on top of the fact that with what's going on in the current outbreak, you're also going to have people buying, toilet paper, buying all this other stuff, stocking up on stuff because people don't know how bad it's going to be. So, this is like a win-win all the way around, and I think they're not going to be as affected as most companies when it comes to the 2020 recession. So going into my second pick, we have ticker sign CPB, which is Campbell Soup Corporation. Their moving average 50 is 48.44. Moving average 200 is 44.82, and they ended the week at 51.76. So they're doing fantastic. Actually, don't have a printout from or a link from their actual company because they make soup. So just think about soup, chicken noodle soup, tomato soup, all types of soup that you can think of. That's what they make. So it's pretty self-explanatory on what they make, and that's usually what people buy in times like this. They'll load up on canned soup, load up on tomato soup. Have a bunch of those stored up for emergency situations, and I just see them continuing to grow because of that, because of the pandemic. Also, with the Tennessee tornadoes, people buy soup and stuff, a lot of canned goods as well to give to people in those sorts of situations as well. So, I see them growing in the future and a good hold for the long term when it comes to 2020 recession. So going to my third pick, we have ticker sign COST for Costco Wholesale Corporation. Now Costco, you know, to me it was kind of like a in between whether I wanted to say Costco or Walmart, because Walmart does have Sam Club as well, but I think Costco is going to be a little more profitable in my opinion, when it comes to long-term growth than Walmart and Sam's Club, just because Costco is a wholesaler. So when you go, you're automatically buying things in bulk. And I think there are more Costco's than Sam's Clubs out there. Don't quote me on that. But I think there are. So I think Costco is gonna shoot up tremendously, and people buying things, just saving up. They want to get large amounts of things because they don't know what's going to go on. There's a lot of uncertainty on the actual epidemic itself, and they just want to be prepared. So we can definitely see that. The moving average 50 is 305.59, which is $305.59. The moving average 200 is $287.67, and they ended the week at $311.34. So they're above both moving average 50 and moving average 200. Don't have a link for those, but you can go online and look up Costco, do your own due diligence, look up some of their articles, and look and see how they're performing. But I think Costco is a good pick for consumer goods just because they sell things in bulk. So you got companies as well as people buying large quantities of items at one time. So I think that's going to be good for them, and we're going to definitely see that reflected in their revenue for their next quarters. Now, going into the last one for consumer goods, and the last one that I have for actual pick suggestions, we have J&J. So ticker sign J&J is for Johnson and Johnson. Been around forever. I think they're a dividend aristocrat as well. If we look, their moving average 50 is $146.17. Moving average 200 is $135.59. And they ended the week at 142.03, so they're right in between their moving average 50 and moving average 200. And Johnson & Johnson, stable company, been around forever. They also give a dividend, so if you want to get one of these companies and you want to make some money as well, get PMG in the consumer goods category and get J&J. Those two companies will pay you. Not sure about Costco and Campbell Soup about their dividend, or if they give a dividend. Didn't look that up, but I know Procter and Gamble and Johnson & Johnson both give dividends, so you'll be getting paid while you own the stocks during the recession. So it's always a good thing. Johnson & Johnson and Procter and Gamble have been around forever, so I don't see them ending their dividend just because of the 2020 recession. So good long term holds. Johnson and Johnson actually definitely have some of the things they have. They make orthopedics stuff. They have surgery equipment, surgical equipment. They just do a lot of stuff in general. Medical supplies, band-aids, stuff like that. The company, you can see all their products everywhere. Anytime you go to a store, baby oil, baby powder, stuff like that. Stuff that people use all the time. That I think people will continue to get. But now in times of crisis, or with the market going down, or the stuff going on in the news, I think people are going to load up on those, which makes the company's revenue go up. So those are my um, picks for how you become a millionaire in the 2020 recession. You can get a couple of those companies and just hold them. Just keep loading up on those. But for me, I'm an average investor. I'm not a financial guru. Just an average person. Um, these are all opinionated picks. I'm not telling you to go out and buy them. Just giving you all suggestions for the average investor, so you know where to look at and you know how to start when trying to build a portfolio to manage your capital for the 2020 recession. Um, and the market may bounce back. You never know. So you know, there are three different categories: health, medical, and consumer goods. And just think of those because there are other companies out there that could have been put on the list. So just think about those when it comes to building a portfolio and longevity. Um, the whole purpose of this is learning and, to teach people, where to look and what things to look for when it comes to investing. And I hope you guys got something out of it. I hope it helped you all. If you like the videos and you want more of these, hit that subscribe button down below, hit that bell notification, like, comment, and share, and I'll see you guys next time. Peace.